Okay, so thank you for coming. So here's the Bruce Lee's quote, which I value a lot, I cherish a lot. And I was told about Bruce Lee when I was starting my trading career, and my you can say my mentor, Chief. So I was trying to trade commodities and forex and stocks and options and everything. So um, and 8,000 stocks. I was chasing just any hot stock. So he pointed out that instead of chasing around different things, just focus on one thing first. You master, and then you move to another one. So that's what I did. I just focused on trading stocks and options. So here's Bruce Lee saying, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So that's what it is in trading. One kick 10,000 times. So every day when you turn on your computer and you get ready to trade, you're waiting for that setup. So in the beginning, you can master one techniques, and that's all it needs. And later you can add more to it, one by one, and you can have an arsenal of techniques in your up your sleeve. So whatever the stock is doing, um, if you see the pattern, if you see the technique can be applied, that's what you apply and take advantage. So I'll show you some of the concept or some of the techniques I use, and it's common sense. It's just common sense. Yeah, that was a Coronado Bridge. Okay, so and you can ask me questions. So you can type your questions in the chat box, and if it's relevant to that point, I will answer. Otherwise, I will answer your questions at the end. So this may be a hour or hour and a half long uh, talk. So I'm not in a rush. If you're in a rush, you can leave and listen to the recording later. So the techniques which you or any trader should master are those which gives you the faster return. So compounding effect. So it's better to make 18% in one day than 25% in 5 days. So so I'll show you the techniques which I use where the compounding effect can take place, and the result could be 1,000% in a year, 4,000%. So it depends with the option. So you can just keep hitting the winners, and the portfolio can explode. Now, some of the strategies I use, this is not all, this is just few, but I'm just mentioning because I have a 1-year coaching program, so I teach everything in there. So this is some. So money making strategy. So it's a breakout strategy. Not all breakout are profitable because a lot of breakouts fail. So you have to understand which breakout, from where the breakout is occurring. Is it occurring on the consolidation? Is it occurring after the 52-week high or a new high or a gap up? So what kind of a breakout strategy? So what kind of a breakout? So a lot of breakouts can fail. So and the breakouts can be something called negative reversion. So it could be a negative reversion trade. So applying the breakout strategy at different phases of the market. So I'll show you some charts. Maybe I have some this time, maybe not. And then the breakout reversal. So I love the reversal. So when the market makes the reversal and then breaks out. So when the market reverses on some bad news or something and then breaks out, that's the fast move. So everybody is taken out. All the week long, then the week shorts are taken out, and then the market just keeps going. So I love breakout reversal. Another one is a gap up. So I'm just giving you some ideas about these strategies, and then I'll show you some. So the gap up strategy is when the stock gaps up is ideal, but not all gaps make you money. Gap fail. So it depends where the gap is occurring. If the gap is occurring right at the resistance level, just below the resistance, then that gap has a high chance of failing because it just market gapped up and right at the resistance, and then the sellers are waiting there, and then they sell, and then we say, okay, why this gap didn't work. Same for gap down. A lot of stocks gap down every day. Almost, if you look at the gap, all the stocks gap up, but some are significant and some are not. So the stocks gap down, and then the market reverses upward. So what is going on? So it depends who is selling and who is buying. So beauty lies in the eyes of beholder. So beauty lies in the eyes of beholder. So a lot of stocks gap down and then they reverse. So this is one of my, in the bullish market. So it depends on the market also. So on a bullish market, like we have these days, the gap down reversal strategy here, this gap down reversal strategy I love, because when the market gaps down to some important support level, so it has to be some support level, and the market gaps down, it could be a support itself, it could be a trend line, it could be a moving average, whatever it is. We have to identify that this gap down is just opportunity to go along. So I do that. Gap up reversal. Gap up reversal is when the market gaps up to some resistance and then coming down. So usually I do that in a bearish market. So when the market gaps up and then reversing, that is stop. And another one is the opening range breakout. So this strategy I apply every day, and you can apply too. It's not that difficult, and it is something called, it's also called initial balance period. It's also called opening range breakout. Tony Crabble, if you Google Tony Crabble, he popularized this strategy. His book is no longer available. If you want to buy, you can buy it on eBay for $1,500. So he came up with various strategies. So one of the strategy is the opening range breakout, and I learned it a long time ago, about 10 years ago, and I've been applying it. So in opening range breakout, let's say you, first of all, you need to have a basket of a stock. So you can chase 500 stocks or 1,000 stocks, or so you need to qualify the number of stocks in your basket beforehand. That these are the stocks I will focus every day. So I have about 550 stocks in the overall database, and out of that, I have cut down to 170 stocks as my core stocks. I call them the core stocks. So the core stocks mean that these are the stocks which I will focus. These are the ones which move up and down and make me money consistently, where I have a high when I understand their behavior. It's like understanding the behavior of your child. So I understand the behavior of that stock, how they move, how much they move. When this move, then what's other moving? When let's say Home Depot is moving, the low moving. If a John Deere is moving, is the cat moving? So CMI moving. So things like that. So 170, and also based on the ATR. So apply the ATR, the average true range, how much they move. If the stock moves like 20 cents a day, I'm not interested in it. But if the stock moves $2, $3, $4, $5, I'm interested in it. So that one. And if the stock has a what is it called? I'm getting the webinar is full mess, keep mess. So the option. So also all these 170 stocks are optionable. So optionable means that they have a decent option chain available, and the rest of the 200, 300 stock, 300 plus are, I call it non-core stocks. I don't want to miss them also, so I keep them on the side. So if I don't find any opportunity in my core stock, then I open up a non-core, which I call non-core, and then I go through the list for those stocks. So it's like that. So, so I have identified the basket. Now, when the market opens, so everything is moving. So I filter them on a net change basis. So if you filter them on a net change basis, you will see all the stock which are moving a net change percent basis. So all the stock which are moving up, I can see, and then I filter them on a window, on a 5-minute window, on a 15-minute window, on a 30-minute window, where I see if the stock has moved, making a new high during the first after the 5 minute, that it means that it is still moving up after 5 minutes. So I take note of those stocks. Then I say, okay, after 15 minutes. So usually it's good to wait for 15-30 minutes before putting on a new trade, because the news comes up, during the first half hour is very important. So just wait for first 30 minutes, minimum 15. So when the market moves more than 15, if the same stock is moving beyond 15 minutes, making a new high, so the stock will filter on those new 15-minute window. So I'm taking a note on those stocks that, hey, this stock is still moving after 15 minutes, making a new high. So I keep watching. I call it detail monitoring and overview monitoring. So this stock goes into the detail monitoring, and the other stocks are on the overview monitoring. And I'm also watching in a detail mode. I'm watching the market. So I have to watch all those indices, all the futures. So everything is going on in the morning, and then I decide. And the volume. So what is the volume? The volume has to be decent in the morning, early time. If the volume is not picking up, it means it was just some retail traders, they get in, and nobody's following them, or maybe it's the market, the specialists or the big boys, they're just testing it. So there are a lot of things going on in the early 15 to 30 minutes. So after I decide which one, then and I start also looking at the option chain, because I'm option trader. So I have to start looking at the option. If the spread is, I don't care about the volume, but I care about the spread and the volatility. And the reason I don't care about the option volume and the open interest, because the trading is based on the stock, not based on the option. So if the stock is telling me that it's moving up, and then I say, okay, the stock is moving up because I know it's moving up. I can feel it. I feel good about it. And then if I look at the volume in the option, and if there's no volume, but the spread is okay, then it's okay. I take the trade because the stock is moving. Others may join. Who knows? Others realize that this stock is moving, and they also join in the option. But if the volume in the option is also good, in particular strike, maybe the next month coming up, like September, or maybe in October. So I look at all the options volume in the coming month and the next month, and then if the volume is high on a certain strike, then that tells me also where they are betting. So if, let's say, if the stock is trading at 32 and the high volume is at 3750 strike, so and the stock is at 32. So 3750 strike, the high volume is high there. So I make my decision or evaluation that, okay, maybe they are targeting the 3750 target for the stock. So I'm not going to buy that. Sometimes I do buy high out of the money option if I expect the market to move faster towards that strike. Otherwise, I'll buy either a 30 strike or 35 strike, not 3750. So all this combined, then I make my decision and trade. So this is the opening range breakout. And okay, so the types of trading. So there's a scalp trading, which you can scalp like every 2 minutes, 3 minutes, you're getting in, getting out. Day trading is where at the end of the day you're getting out. Swing trading is from 1 to 7 days, so you're getting in and getting out in 7 days. So this is the bulk of my trading, swing trading. And then the position is where you hold for 2-3 weeks, and long term is like is other word for forever. So swing trading. So this is where the most of the money can be made, and is made if you're good in entry, and exiting at the right time. So, or you have a profit objective. So the swing trading. So the swing trading is like the in between road of investing and day trading. So a lot of us cannot day trade, and we don't want to invest. So we combine the two and the features and call it swing trading. So maximizing profits in short period of time. So 30%, 40%, you will see some even I didn't include the Sohu chart. Somehow I missed it. So so Sohu 325%. It was a the some of the trades can go into a triple digit gains. So, but most of the time the gains are between 40, 50%, 40, 50%. So knowing your average gain, and when you're hitting the target, then you know that, okay, this is what the profit is, 40 to 50%, and the same for loss, 40 to 50%. So minimizing the downside. So minimizing the downside risk, and also minimize the downside risk by knowing where to exit. So a lot of time you need to exit from the trade, not when you are fearful, but you need to exit when you are wrong. So when you are wrong, you need to exit, not when you are fearful. So if you're fearful, it means you're over trading. So you need to cut down your trading. Just because the position is going against you, uh, ask yourself, is this the chart is telling you to exit, or is it you telling yourself to exit because of the loss, which you don't cannot bear it. So if that's the case, then cut down on your number of trades and cut down the exposure. So I receive all day long, I receive this common question from the various I call them newbie, because they're the way that they send the question, I can tell that they are newbie, and some when they send me smart question. So the newbie will send me the question, hey, I've taken your trial now. I just signed up for your trial. So the trial is for 5 days. So it's 1 week trial for 5 days. I just took the trial. How many trades I will get in this 5 days? Can you tell me the number of trades? So this person, he wants to have as many trades as possible. He just wants to load up. And then so after 5 days, what happened if the trial is over? You have some open positions left. So can you manage it? If you can manage it and you don't want to continue, it's fine. But what will happen? So how will I be getting the guidance after my trial is over? So you can see from where this person is coming from. So he's completely new. We just want to take the trial and a number of trades. So it's not the number of trades you just load up, and no. So quality of trades, and if you cannot sleep, then cut down the trading. So maximize profits in short period of time, minimize the downside risk. So the beauty of stock trading, so anytime when the stock moves quickly in your favor, 3 to 7%, that's where so minimum 3% needs to move. And when it's moving 7%, some move 14, 15, 30, 40%. You will see AMD, Sohu, and a lot of others, malls and all. So they can move 14, 15, 30, 40% is fine. But on average, the stock, if it moves 7%, so when you combine 7% move or 3%, then and the timing is right, the option trading brings you 40 to 100% return. So 40 to 100% return, and then you keep turning the trades. So now the swing trader. So the swing trader, so if you ask me what indicator do you use, Noshi, I'll say no, I don't use any indicator. I used to when I learned MACD, RSI, stochastics, all those indicators I was using, ADX, DMI, everybody starts from there. So later I just quit using the indicators, and I don't teach any indicator in my 1-year program, so I don't teach. So no need for perfect. So swing trader tools. So these are the tools. No need for perfect indicator, because the perfect indicator will give you the entry when it's about to exit. So unless you are a long-term trader and you don't care about the entry, maybe the indicator gives you. Otherwise, the indicator is too late. By the time it catches up, what's going on, it's late. Also depends on the time frame. So if you're applying the indicator on a daily chart for swing trading, it's too late. So if you're applying the same indicator on a 15-minute chart or 30-minute chart, it will give you a better entry. So maybe if you're using indicator, cut down your time frame to 15 to 30 minutes, and then you will have an edge over others. So recognize the move before the move occurs. So you have to go down to 15-minute chart, 30-minute chart, no more than hourly chart. So the daily chart gives you the overall time, overall like a landscape. So daily chart is considered as a background, so you know where it is. So when I look at it, I immediately look at the daily chart, that's for sure. So I immediately look at daily chart, and then so that's my, because I need to know what's going on in a day frame. Even a day trader needs to know what's going on a daily chart. He doesn't have to look on a weekly chart, but he or she should look at the daily chart to see overall where it is, even if the person is a day trader. So even so, if we are swing traders, so I need to look at the day chart, and I need to lean on the weekly chart just to see where it is overall. So I'm not basing my entry on a weekly chart because I'm not a long-term trader. So and I don't I see the overall pattern on a daily chart, and then I switch my what is it, my time frame to 5 minutes, 15, 30, and 60 minutes. So on one monitor, I have so the setup I have is like 14 monitors on 3 different computers. So on one monitor, I just switch that chart. So when I'm flipping, I'm looking at the 5, 15, 30, and hourly, and on another one, it's a daily. I know that it's there. I don't need to look at the daily. Once I look at it, I know that it's there, what is doing, where is the support, where is zero distance. I don't need to look in a detail mode. So for swing trader, you don't need a perfect indicator. You need to learn the pattern, what you're comfortable. Maybe one like Bruce Lee, and execute same techniques daily. So every day is the same thing. It's like I cook the same bread. I prepare the dough and I turn on my oven, and then I cook the same bread. I cook the same every day. I'm cooking the same bread. It's just the bread it's like a naan. So when you go, in an Indian restaurant, Pakistani restaurant, they ask you, do you need plain naan? Do you need a garlic naan? Do you need this naan? So it's the same naan. It's the same bread. It's just different thing, little bit different. So use your judgment, use the skills. So these come from experience, expertise, flexibility. So need to be flexible. Don't be rigid. So apply some flexibility in your trading, and understand the broader markets and indices. So understand overall. So I do a detailed market analysis every day. At the end of the day, it takes time. So I have an assistant who helps me, and we go through the 4 indices and come up with something. So for market, to understand where the market is, you need to know what is the trend, the minor trend, the major trend. So minor trend can be up and down within the major trend. So I look at the minor trend, it's okay. Minor trend is up or down, it's okay. What is the major trend? So the major trend, our analysis shows the major trend is up since April 17th. So March 23rd low, and then on the March 24th, we got a minor uptrend signal to the upside. So whatever puts trade we had, we cut down. So no more puts trade. We knew that something is going on. The market is reversing, and then we started looking towards the call. And then so first last week of March, minor trend up, and then April 17 confirmed long up. And then another you need to understand about the market, the strength. So in the beginning, if the market is having a crash and then the market is reversing, the strength will not be there. So people will talk about testing the lows, market is weak, and what's going on, and all that. So it's just you need to have a firm conviction on your own skills and ability and your on your market modeling. So once you, if you believe that the market, the whatever you're doing, the analysis that has proven you in the past, it will do the same in future. So I rely on my markets analysis and indices. So understanding the support, the resistance, the targets. So sometimes the market, one market moving up, which becomes a leader, and then other markets are laggards. So most of the time the Nasdaq, it becomes the leader. So all the 4-letter stock, the heavy weight, they move up, and they are the one moving. So Nasdaq keeps moving, and then other when the rotation happens, so you can see the rotation happening, like the money is moving from tag to Caterpillar to John Deere, or to Home Depot, or to airline, or to the hotel, or the booking.com or trip. So you have to understand what is going on, where the market is, how the market is rotating, and which indices has hit the major target, and which one is next. So if Nasdaq has hit the major target and other indices are still moving up, eventually the Nasdaq, after the pullback, eventually the Nasdaq will start moving again, and so I expect S&P will break out, and S&P will make a new high and will continue upwards. So I've been telling for a long time. If you're my member, you know. So this service, I have a service for $27. So it's so crucial to have the service for $27. I mean, it's just it's so important. It's 27 is nothing. So if you go to the website, you can subscribe to market analysis. It doesn't give you any trades alerts. It gives you the most important thing. The first step you need to do in your trading is to understand what the market is doing. If you nail that down, 80%, you can even a monkey can make money from by throwing the darts. If you know the market, so and then choose the stocks, and then you will make money. That's where the monkey keeps making money on a Robinhood app, and then they suddenly the monkey stop, because they just they just buy Kodak and the latest whatever. So in swing trading, you need to just stacking the probability in your favor. So the trading is about stacking the probability in your favor. So this is what I will show you in my caveman chart analysis, how I stack my probability in my favor, and then I take the trade. So when you're taking the trade, there's something called action. So action need to be bold and courageous. Anything in life, not only in trading, anything you do in life, you have to be bold and courageous. You don't have to be crazy or stupid, but courageous and bold. So when you're taking action, you need to be courageous and bold. So that when I see the probabilities in my favor, I become courageous and bold, and I take action. So when you're taking the action, you have to switch your mental state and say, okay, am I feeling good? Am I courageous? Am I bold? Am I not? You don't have to be sloppy. You don't have to be reckless. So there's a difference between there's a thin line between stupidity and guts. So you have the guts, and don't turn it into stupidity. So next. So the swing trading. So when you look at my chart, you will say it doesn't make sense. So how this is happening? So easiest trade comes before crowd notices. So you position yourself, and then bam, the stocks just explode, and that's where you are getting out, not getting in. Or if that looks really good, then you are adding to the position. So I send out alert. Some of my members, they are just killing it 5,000% or whatever. They some don't even tell me how much they are making. So you can add to your existing position, because you have already positioned yourself, and then when it explodes and it has more potential, it depends. That stock has more potential. If the stock has more potential, then you can add to the position, or you can roll your strike to higher strike. So you can buy additional strike to the next strike. So if you bought a 30 strike and and the stock suddenly gaps up and is trading at 35 and 36, maybe you add another strike to your portfolio, 35 strike, and then when you're scaling out, you scale out the 31 and you keep having 35, or you can create a spread. So you can do many things if you know all the techniques. And fortune is made by single, not home run. So always keeping in mind not to be greedy, take the profit, but not to take the profit too soon, because they say you never go broke taking profit. That's very like stupid advice. You never go taking profit. You will go broke taking profit if you take profit quick and loss slow. That will bring like disaster. So don't do that. But the home runs, so there are home runs coming, 3-digit, 300%, 200%, 150%. So realize that home runs. So if you get 1 or 2 home runs, it takes care of 3 losses. So if you have 120% win and you have a loser, 50% loser, that can take care of 2.5 of your trade. So it's smooth and rising equity curve. So, and if your equity curve is going up like crazy, there's something wrong with your trading. So be aware that your equity curve is not supposed to go to the moon. If it's going through the moon, it will come down to the earth the same way. So make sure you understand the equity curve is not supposed to go on a 90-degree angle. If it's going, you're lucky, and then the luck runs out. So our swing option trading, which is mentioned on the website, you can go there or wait for our trial email, which may come in 2 weeks, and by that time you miss out all the trades. So real-time trade alert. So I don't send out any trade alert after the market or before the market. So there's no such thing. It's like performing live in front of the live audience. So when the market is happening, I'm sending the alert. So it's hard to do that, to send the trade live in front of the hundreds and thousands of people. So I do that. And so all real-time trade alerts are sent with the specific buy, price, month, strike, and the target. So specific buy price. It's not like I give a little range just in case, but the buy price is there. And I used to send 3 targets, and I used to call green, yellow, and red. So if you have like 10 contracts, you will sell 2 or 3 of the green and the yellow, 4 or 5, and then keep 1 or 2 for the red target. But I stopped doing it. I may start doing it. I call it green, yellow, and red, like a traffic light. And the technical analysis, so I show the charts. Some in Facebook group. I have a Facebook group you can join if you have a Facebook. If you hate Facebook, you don't have account, it's okay. I used to say myself also, I am beyond Facebook. I'm not in Facebook. But then I said, no, I need to be on the Facebook. So I have a Facebook group. So I post a chart there. I show you through webinar. I'm showing you now. So through emails to my members, I continuously try to send something for the education, so they get educated. So I'm passionate about it. So Facebook is there, and then every member, I have a 2 guidebook. One is free, and another one is for paid members. So it's 75-page trading system guidebook. You get it. All right. So no shortage of profitable trade ideas. So if you're thinking of you will run out of money, then the trades having highest profit potential are sent. So I'm doing the work. I'm doing all the work daily. I'm concerned about your equity curve. I'm concerned about your growth. I am very watchful of your self-confidence. So if you're good, you become great. And if you don't know anything, you start knowing how the market works, and you can improve your technical analysis. It depends how much time you spend during the day, and learn and become independent trader yourself. Okay, so now I open my another chart. Just a second. Not the chart, the presentation. And the question I have, let's see how many questions I have. Markets, I'll explain. I don't have charts for markets, so I cannot show you. That is happening to me. I don't know in helicopter what is happening to you. Sometimes greedy, then stock goes down, and I lost dollars. So yeah, it happens. So you will learn Analytica. So is the one target you send the green, yellow, red. So the one target I send is yellow, which means take the profit, uh, sell, and I send the alert to sell. So that is yellow, red, and then when the what is it? When the mark when I see more potential, then I revise the target and I send the revised target. So it's like that. So now let me open my. Okay, so all these charts which I'm showing you is like, I don't know how many charts I have, 50, 60, whatever, maybe 40. So I'm showing you in alphabetical order, and I'll explain my thought process. I'll explain the common sense, and so there's lot behind, but I'll try to explain. And if you are my student, then you know what I'm looking for. So here is the Apple. So Apple, this was the earning trade. So I have an earning service. So far, we don't have any loser in the this earning season. All the blockbuster winner. Usually, I have loser in the earning trade. So in the earning, I don't trade straddle or strangle, butterfly or iron condor. So I leave it to the geniuses who can do that, but I don't. So I just use my common sense and look at the chart, look at the market indices, and based on the experience, I just buy either call or put. So I don't put on the spread in the earnings. So Apple was a earning trade. So here I am. So the tech stocks were beating. So the tech stocks were beating. So what are the odds of Apple going down then going up? So that's what it is. And if you look on this chart, after a pullback, so gap up from 50-day moving average, went for 2 days on sideway motion, and then it showed that it wants to go up. I know you can say on earning it can be 50-50. So it can be point toss, it can tank, but it did not tank. It went up next day, and our members made tons of money. So actually, it went up a lot more than where we exited. So, so 95% gain. So you see the big gap up. So there was an earning trade. So here is the AMD. So another one. So AMD, if you look at this tiny candle. So sometimes the tiny candle giving you clues. Sometimes the big candle is giving you clues. So it depends where the candles are forming. So I use my judgment. So AMD, somehow the chip stocks were moving. So it also depends on what's going on during that day. So overall, the market is bullish. So I don't know what was going on 7th of July. So you can go back 7th of July, if what was the market was doing. So I have the log of my market analysis. So I can go back and see when I put on this AMD trade, what was the condition of the market. So I know that. So maybe the chip stocks were moving, maybe the technology stocks were moving, and AMD showed me the sign that it wants to go higher. So went long, and the actual entry came here on this hammer when it broke the 50. If you look on the left side, right at this support, and then it closed above 50. But I did not notice this one. But so it doesn't mean that if you don't notice the stock, the previous, you get in later when you see the opportunity. So at 53.77, and then it just went up crazy. So you see, it just went up and up and up, and now it's like overbought. So now it's doing nothing. So we will look for re-entry. So it's there on my watch list. Here's Boeing. So Boeing, yeah. So Boeing on 11th of August. So we have another trade open which we have not closed, but this one. So if you have a higher strike which is not making the money for you, and then you see the entry, or actually we had the opportunity to sell at $200-300 per contract profit, but we didn't sell. So officially, I'm holding it. So anyway, so if you're in the trade and you see the market is moving, you don't have to buy the same strike. You can buy the lower strike or higher strike. So we bought Boeing on this day, on 11th of August, and gapped up and made us 111, 112% today. So we sold around 187 price, September 175 cost. So 111% profit in the Boeing. So here is Baba. So you will see I'm trading the same stock, all the movers. So these are famous stocks. So if all the 170 stocks. So if 170 stocks are giving me opportunity, I don't have to look at other stock. If I find another stock and I say, hey, okay, this stock is not in my database, and it's where it's supposed to be. Is it supposed to be in the core stock, or is it a non-core? If it's a core, okay, I add it, and my list will go from 170 to 171. Maybe one is deleted because of the merger and acquisition, and whatever happened to that stock is no longer moving the way I was thinking. So this one, it broke the consolidation where it was around here, and we went long and sold. So this tiny candle, whenever I'm in the trade and I have a decent profit in option, then I look at the resistance. I say, okay, what are the odds of Baba pulling back, then going up further? What will happen to my profit? So even though 18%, if you look in the dollar terms, because the Baba has a high price option, so maybe I made 200, 300 per contract, I don't know. But on a percentage basis, I made 18%. So I look on the left side. So I entered here, exited here, and I look on the left side. So it had resistance. I said, okay, I take the profit in Baba. Here is, this is today's chart of Baba. So Baba is looking like wants to move higher. So this is today's chart. So after the gap down, so when the stock gaps down and then put on a tiny candle, and then next day it gaps up, it tells us something. It tells us something that what are the chances of Baba moving up, then moving down. We went long yesterday on Baba. So we have an open position in Baba, and today Baba gapped up. So it's and then what we will do, we will sell when the gap is filled. So we are swing trader, we will just sell around 259, 260. Here is VAX. So look at this candle. Sometimes the tiny candle tells you the story. Sometimes the big candle tells you the story. So what is the odd of this Baxter going down, then going up on the day, the blue arrow I'm showing, it gapped down from the consolidation. So when the stock gaps down from the consolidation, it says I'm bearish. So it is telling you it's bearish. So let's say there were shorts here somewhere. They shorted. There were shorts, and then when they so they did not close it because it's just going on a consolidation mode. And they are holding their short position, and then it gapped down. So when it gapped down, they are happy. They are making more money, and then some other shorts they joined because it gapped down. Okay, they were watching it. Okay, I'll enter when it gapped down. So they entered after the gap down, and then so they did not close. So it closed higher, little high from the low. It closed above. So they're still happy. And then next day, what happened? From the same close price where it closed, it just started to take off. Somebody, either there's always some reason for this stock. I don't know the reason why. I don't know. I don't need to know why. I can read the news later why the stock has started moving. I need to get in. So look at this one. The Baxter, it closed right here, 82.50 something, and then it opened at the same price and it started to just move up, and it filled the gap. So when it starts to move up, all the shorts, they're seeing their loss, their profit evaporating. The guy who shorted on the gap down, they are definitely seeing their loss. The guys who were holding the shorts, they're seeing their profit getting evaporated, and as it's bad, so some big guy is buying it. So the buyers are more than the sellers. So as the buyers are more, the more buyers are coming in, and it took off. So the 200-day moving averages act as a resistance, but when the resistance is met with the force, with the power, the resistance is broken. So when you have, it's like a cannonball, and this red line, 200-day moving average, is like an iron wall. So when you throw a cannonball, the iron wall will even collapse. So before, these little candles, they were like tennis balls. So they were not able to break the resistance. But when the cannonball is approached, it broke the resistance. So it has a good chance of coming, making upward move. And this is what happened. So we 2 days of pullback because of some energy, needs some energy. All the energy got lost here on this move, and then the new energy. So when the market move up and hit the 50-day moving average, we just exit with 25% gain. So this is like a common sense logic. This is Baidu. So Baidu, despite all the China and tension, the Baba and Baidu telling me that's going up. So we entered Baidu somewhere here on this white day candle. So this is the trend line. So the profitable trade comes from the either you know the support and resistance, and you know the trend lines, and trend lines are acting as a I'm not showing you the screen. Are you not seeing the screen? Are you seeing my screen or not? Okay, so I'm sorry if you were not seeing my screen. So now the Baidu, so here's the Baidu. So Baidu is in a trend line. So you see when the market keeps bouncing upward on a trend line, it's telling you this is a solid support. When the market keeps moving up on a trend line, it's telling you support. So we got in here and we are still holding the Baidu calls. So still holding the Baidu call. Let me go back and show you the chart in case you missed. So let me go back quickly. Sorry about that. If you can see, so I'm showing you charts quickly because we have gone through. Okay, so Apple, this is Apple. So Apple here, and we got in on earning date and then gapped up. We got out. Here is AMD. So AMD, maybe the market was moving up or the chip stocks were moving up. So we got in and then we sold, and then it just kept going afterwards. So I sold because of this candle, but AMD kept going up and up and up. So AMD just kept going up and up. But I sold here. Here is the chart of BA. Where is it? Just a second. My chat, I'm looking at the chat and hung up. Too many glitches. Just a second, sorry. I see the chat now. Just a second. I'll be back. I'm here, but I need to close this chat window. Yeah, I have, I'm just starting I cannot see the symbol of the stock. Just a second, please. Do you see my screen now? Okay, so it's BA. Just a second. I don't want to close it hung up. Just a second, please. Sometimes you get stuck and you don't know what to do. Okay, I'll show you I'll show you my presentation like that. So this is the Boeing chart. So we got in Boeing right here and exited um, Boeing. We exited here. No, Boeing is, yeah, we exited. There's no exit chart, but yeah, here is a red arrow. Red arrow means exit, and the blue is entry. So we exited at 187 today and made 112%. Next one is Baba. So Baba, we entered after it broke the consolidation. We entered after the consolidation break. So what are the odds of Baba coming down then going up? So, and then we exited at after 2 days. Whenever the tiny candle is formed, we exit if it's coming at the resistance and we have a decent profit. So 18% in Baba may be $200-300 per contract, but it was 18%. Now this Baba is telling us it wants to go higher. So if you look at the Baba, it gapped down, and we already exited here. So it gapped down, and we entered in Baba yesterday, and today it just proving that it wants to move higher. So we will exit right at the gap fill. Here it's Baxter. I was talking about the Baxter. So look at this Baxter. The gap down occurred, and the shorts got clobbered. They may, so when this kind of action happened, it means buyers have taken over, and then the shorts are covering also. So it's double effect. So, and then we exited right here on the 50-day moving average. We made 25% gain. Here is the Baidu. So I was talking about the Baidu at the trend line. So when you look at the trend line, whenever the market is bouncing from the trend line continuously, that's telling you that that this trend line is acting as a support. So we enter right, and then when the trend line is also coinciding with the 50-day moving average of 200, so you can see Baidu was coinciding with the 50-day moving average, and the trend line is there. So we went long. We're still holding it, and we will sell depending on if it breaks this resistance line at 130 or it holds. So if it's holding 130, we will sell. If it breaks, then it's just it has taken out this resistance around 135. So the resistance has to be taken out with some offset, not by penny or 2 penny, and the resistance broken. Resistance for Baidu is like $1 at least above 135. So here is Burlington. So we got in Burlington yesterday. If you look at today's chart, Burlington moved up 7-8 points. So we are holding Burlington. So here is again another trend line. So if you draw this trend line and it's approaching the trend line, you have to decide whether this trend line will act as a resistance or as a support. So you do have to make your judgment call. This is where the experience comes. So we went long on Burlington yesterday, and today it went up $7, and target is 200. So expecting this 200 line. When Burlington reaches 200, we will sell our calls. Here's Caterpillar. So the money was rotating on this day. I saw a lot of stocks, such as airline stocks, hotel stocks, construction stocks. They were getting bought. So Caterpillar, after 2-3 days, after the same pattern, gap down, two days of consolidation, then gap up. So if the market gaps down and then go sideways, and then the gap up, what is telling, if you apply the common sense trading, it's telling you it wants to move up. So Caterpillar, we went long, and we sent out the complementary trade also. So if you are in my database, so you receive, we send the complimentary alert, and then today we sold Caterpillar. So you see the move, boom. So, and then if you look on the left side, so always pay attention to the left side. So if you look at this candle and go all the way here, it's hitting the resistance. So if we are option trader, 81% gain in option by holding 4 days is good enough. So 81%, I take 81% in 4 days, then 100% in like 10 days, and maybe it becomes 20% or negative 50%. Here is cost. So cost after 200-day moving average. So again, if you're looking at the cost chart, and so when I go to Costco, it's busy, and I don't want to go there again and again. So if I go there, I just fill up till I cannot drag that card. So because I don't want to go there. So every time I go there, I see people there. In the height of the COVID, yeah, the Costco was empty, but not now. I have to wait in the line, and but the chart is choppy. So if you look at this chart, it's very choppy. So here is they're telling you the the Costco is, if the market gaps up from a 200-day moving average or a 50-day moving average, then what is the chances are that it wants to go higher. And if it goes below 200-day moving average, it will stay here somewhere. So Costco, we went long, and here it is. Okay, so this is what happened. So we went long on this day, and then so it pulled back, it dipped below 200 moving average, and we stayed long. And look at, and the reason is that this candle is telling you the support 295. If you look on the left side, this is the support. So here is the support where it bounced back, and if you look on the left side is support. And when we went long, it pulled back. It's okay. Then it dipped below 200. So it playing a ping pong fashion. It's going up, then down, up and down. And finally we exited here and took our. So when it takes time for the stock to move, the percentage gain goes down. And when the market moves fast in your favor, the percentage gain is more because of the time decay. So 25% gain in Costco, and that was the logic. Here is CSX trade. So when I look at the CSX, the railroad stocks are moving. So CSX moving, UNP moving. In UNP, we put on the spread trade, which is a huge winner. So we do have a spread service. So we put Square trade, CSX, UNP, and others. So the way we trade a spread is we put the trade and we forget, and when it hits the target, the short strike, we close the spread trade. So CSX, what are the chances of CSX when it's bouncing up and down in a narrow range? We went long, and it took time. So we only made 27.54% gain because of the time it took. So it just didn't go anywhere, but finally it moved, and then we exited. Here is CTSH. So again, it gapped up. You look at this one, gapped up from 50 days. So what are the chances when the stock is gapping up from 50-day moving average to come down, then to go up? It went up. So after the gap, another gap, exit, 54% gain. D, so D also came into radar, but I didn't take it last week, like 2 days ago, 3 days ago, but we took the Caterpillar. So we had Caterpillars, we didn't take the D. It was the same category. So D, this candle is bullish reversal. So if you look on this, it's reversing from the support from where it reversed before. So what are the chances of D going down to go up? So we went long, and we exited on a tiny candle when it gapped above 200 moving average. 31% gain is better than 50% in 3-4 days later. Here is DE now. So this is where the DE is. I saw the DE, but I did not take it because of Caterpillar we had. And now DE is sitting at the resistance of 195 as of today. So to the chart, 195 is the resistance. Yes, Analika, mostly these days, as I said, the market is bullish, so I'm buying calls. So I'm not interested in buying puts. I bought 2 puts trade. One was VLO, so we made a chicken change in VLO put, and then we bought GS puts. So GS, we had a loss, not much. So immediately recognize that, okay, yeah, this GS is, and financials are reversing. So turn around. So sold the puts, bought the calls, and we made more in GS calls than we lost in puts. So it's better to focus on one side of the market when the market is moving than to get chopped in a bearish trade when the market is bullish. So that's the way I trade. So DE has met the resistance at 195. Here is DHI. So the home builder, the stocks are were moving. So we went long. So again, if the group of stocks are moving, then you need to decide which one. Is it Toll Brother or KBH Home or DHI or whatever, which one you like. And sometimes the one you like is the one which doesn't move and the others are moving. So it moved, we made 32% gain, and it moved further up. We exited early, so we made 32% gain, but it's okay. So now this is Disney. So Disney was an earning trade. So again, again, you need to use the common sense that what are the chances of Disney. So Disney went down right at the morning announcement, like $1 or so, but then it just rocketed upward. So you have to be aware of what the company is doing and what is the sentiment. So we position ourselves in a Disney call, no strangle, no straddle. And then next day it just rocketed upward and we sold Disney. So we sold at 129. It went to 131 or so, but we sold at 129. So we made 86%. Here is Disca. So Disca, we entered today. This is little extended, but look at this chart. Who wouldn't love this face? So that's what you need to ask. Okay, who wouldn't love this? So look at this bullish, where the candle open is same as low, and the high is also same as close. Is super bullish. Even though Disca may have pulled back, it pulled back at the close, but when I prepared the chart, it was looking like this, pretty. So we went long on Disca, and we will hold for 2-3 days, 4 days, 5 days, 6 days, whatever. Maybe we will add to it and we'll sell around somewhere here in this zone. So here is the resistance around 26. So, and if you look at this one, if you look on the left side, so you can see where the resistance is. So here is this resistance, which is here. So between 26, 26.50, unless it breaks like a cannonball, then it goes to 28, 50, 29, then we sell there. So if it goes there, we sell it, whatever it is. So we will see what Disca does. Here is Dish. So we went long on Dish on the gap up from the 200-day moving average, but it took us a while for this trade to work. So you see, we made 25% gain, but look at it went on a sideways mode forever, on ping pong, ping pong, ping pong. So if you just put on one trade and you're sitting on it, then your money is not working. So if you put all your money in one trade, then you're just sitting on it. And if it tanks, then you lose. So it's better to divide your money into different trades. So here, ping pong, I use stop when I'm really wrong, when I know that I'm wrong. So here is ping pong, ping pong. What is the point of putting the stop here? Tell me. If you went long here, you stop, why you will stop? What is telling you that you need to get out? So it's okay. Sometimes the trade doesn't go right away, but it did win. So when it goes, you exit, you realize that you have been holding it for a while, and it's time to exit, take your 25% gain. Here is EMN. So EMN we entered yesterday, we still holding, and the reason is you can see from 50-day moving average, what are the chances of EMN to go down or up? So it may go down, yes, it can fall to 200-day moving average, but so there is this buffer between like a support underneath the support. So when there is a support under the support, then your trade becomes more powerful. When there is a resistance above the resistance, your short trade become more powerful. So it's better to have support underneath the support. So whenever the 50-day and 200-day moving average is near the zone, and you have, it's like you fell from second floor to the first floor. It's like that. You don't want to fall from 10th floor to the first floor. So from second floor to the first floor is okay. Even we call it ground floor back on, okay, ground floor. So here is the buffer. So 72, between 72 67, the EMN has support, and we are still holding it. Here is FB call. So this was an earning trade. So we went long on FB right here. So what about the chances when all the tech stocks are moving, the FB will fail? It's common sense. So here is FB just gapped up big time. See, entry here, exit here. Actually exit a little higher. FDX. So FDX was also, I don't know if it was, so UPS and FDX, they move together, right? So if UPS is moving, look at FDX. If FDX is moving, look at UPS. So they are just, everybody is buying, home delivery. So everything is getting bought from Amazon and all the other stores. So FDX, we entered here on the gap up logic, gap up from the consolidation, go long, and look at what happened here. So if your stop loss is hit, we can also always re-entry. So if the stop loss is hit, it hit, and then when you receive by another alert, you can enter again. Sometimes what happens, the stock does not give, on a technical basis, the stock is not giving us the exit, but on an option basis, it's hitting the stop. So what you are trading, you are trading the option, yes, but if the stock is still within the technical boundaries, then ideally you shouldn't be selling the option. So understand that, because you're using the option, but you're trading actually the stocks. So here is the trade on FDX. The FDX here, exit here. Look at the gain, 77% gain. Here is, so what happened? Another trade. Oh, so I had two trades on FDX. So this was another one. So after the consolidation at the top, when the market is consolidating at the top, look for the breakout on the upside. The chances are that the market is just consolidating at the top. It will break out to the above level. So if it does on the downside, then it's okay. It broke to the downside. But what are the chances of after after the gap, it's taking some rest, so it's gaining energy, and then when it's breaking above, go long. So we went long again on 27th of July, and here is another gain of 39%. Entry here, exit here. So if you look at the UPS, it must be doing the same thing. Here is GM. So we sent out trade for GM, and I'm regretting I exited early. So look at this GM. We entered on a GM, like we bought calls for 68 cents, 70 to 80 cents, 68, 65. Some they bought more, like at 34 cents, because they know my trade works. So they, instead of getting out, if I send the alert to buy at 75 cents, and if it's trading at 35, when the option price is low, there's no stop. Because if the stock moves $1, the option will go to 5 cents. So people make a mistake of buying a low price option, and then they're putting the stop at 10 cents, 5 cents. So that is your commission. So to begin with, when you're beginning the trade, and if it's a low price option, you have to know that, okay, this could be 100% loss. But if it's not, it can be a big winner. So GM was a reversal trade, and we exited early. And right now the GM calls are trading at 170% gain, but we exited at 20% gain. And you look at the dip. So we bought a 75-cent option, and the option went to 35 cents. So there's no stop. And when I send the alert, there's no stop. So trade accordingly. So the traders, especially the coaching students, they bought more at 35 cents and 40 cents. They accumulated and sold here, but now the same options are at 170%. We exited at 27. My target was 28, 29, and it is at 29 right now. Anyway, so here is now GM. Yeah, so this is the chart, today's chart. So look at, we entered here, and this is where the GM went, 29. So GS, this is a call trade. So we entered into puts right here on the gap down. So somewhere here on the gap down, we entered as a put trade. The market was going down. So we entered a put trade. And then when the GS started to move up, realized that, okay, the GS has reversed, it's not going down. So close the put trade, go long. So we went long. And then when you're looking at the GS, you're looking at the American Express, you're looking at JPM, you're looking at other financials also. So you're not just isolating yourself into GS and then that's it. No. So you have to look at others. So if you look, JPM trade was sent as the earning trade after the, and then we close it today as a big winner. So GS was a straight call. So we switched from puts to calls, and we sold it today at 209. So we made 27% gain. So whatever loss we had in puts, we covered into calls. So now GS is no, actually no. This is a partial no. So this is a partial. So sometimes what we do is we sell half and hold half for higher gains. So we sold half at 209 and the rest we sold today at 215. So if you sold half at 30% gain and then the rest at 60% gain, then you can average it out, your gains. Some they don't sell at half, some sell everything at half, and I send the alert, sell half, sell majority, sell a little bit, buy a little bit more, buy this much, etc. So people manage their portfolio. Here is HD trade. So this is where we entered the HD from consolidation break, and this is where we sold on a tiny candle when it started to rest at 20% gain. It's okay. Here is ICE call. So this is financial. ICE bouncing from 200-day moving average. So what is the probability that the ICE will go up then go down? It took time, but there's no exit. It just ping pong, ping pong, ping pong. 200-day average became flat. Now it's flying. I think ICE is way higher than where we sold, but because of the time, all this time we sold and made 35% gain. Here's IWM. So I have index option service where we trade indexes like IWM, QQQ, SPY, DIA, and other. So here's the IWM call, and we entered at 140. The target was 150. And look at what happened. So for IWM trade to trade IWM, I'm not just looking at IWM. I'm looking at Russell 2000 overall index, looking at all what the overall market is doing, how the stocks in Russell 2000 are behaving. So a lot of stuff goes on behind than just looking at IWM. Say, okay, I want to buy IWM trade calls. So this is where 440. So when you take into other things into consideration, then you have a stronger conviction. That's where your conviction comes. It's like you are holding it. And so 140. So the conviction was strong. It went up to 200-day, but then it fell, and then it took time. But eventually we sold at 26% gain around 149, 150. So we sold IWM at 26% gain. So this is the index service, which is, I think it's $77 per month or 87. So this is our J&J call. So when we bought J&J, we were looking at all the other pharma stocks. So something going on in the pharma because of COVID. Sometimes this stock moves, sometimes that stock moves, whatever. So we went long on J&J. What are the chances of the J&J to go up, then to go down after the gap fill? So we bought our calls at 143 and we sold at 148 when it broke the 200-day, the 50-day moving average. We exited at 40% gain, so it's okay. Here is another this is a JPM trade for earning. So earning trade doesn't mean that you're buying just before the earning and selling right after the earning. You can buy after the earning. So next day, right at their earning announced, and then you see the reaction, and then you expect the other thing will happen. That's where you go make your decision. So earning is announced, and this can be this is a very good trade. So earning is announced, the stock gap down, and then you are watching it and you say, okay, this is stock is gapping down right at the support, and what it's doing, it's failing to move further down. So you go long. So that's what happened to JPM. So because of, and I think because of the earnings. So this was the earning trade. After the earning, so we eliminated the risk of earning also. So 99.88, and then look at what happened. We exited today at 47% gain. So this is the earning trade without the earning. And similarly, we did with McDonald's. So McDonald's gap down after the earning, we went long and closed. Look at the McDonald's today and McDonald's just after the earning. So here's JPM 105. This is the chart of JPM. Here is LVS. So again, you have to say, okay, like airline stocks are moving, the hotel stocks are moving, there's some hope, the casinos are getting bought, so LVS, MGM, Win. So you need to look at this basket. So open your basket for the casino and say, okay, let me see, LVS, MGM, Win, they're all moving. So what are the chances of LVS to go up, to go down from 42, 43 level? How many times it came to 42 and then it bounced back up? What are the odds? So this is what stacking the probability in your favor. So went long and look at what happened. Magic gapped up, 46% gain. So 46% gain on this pullback is better than 50% gain 8 days later. And the Win also moved. We traded Win and made money. So we sent this LVS trade as a complimentary to you. Win also. So we send out early morning something for as a complimentary. We don't care if you're a paid member or not. You can do whatever you want to do with the complimentary trade. So here is the Marriott. So hotels are moving. Hyatt was moving. Marriott moving. So Hilton moving. So so evaluate if the airlines are moving. The airlines are moving. So and the casinos are moving. So where the people will stay? In the hotel, right? So look at the Marriott. So went long on Marriott, and we exited early at 40% gain, but it went up a lot. So 40% gain came. So when airline is moving, casinos stocks are going up, hotel stocks are going up. So all these stocks are going up, and where the booking is happening. So booking.com. So it was trading at 1700. My target was 2000. So I sent the alert. I didn't buy it. Some members, they buy stocks. They put on the spread in options. So I sent out. If I see something, I send out. It doesn't hurt me to send one email. It's just one email. I find something and I send out an email. So send out booking at 1700, target 2000. So Trip is expected to move. So we send out the alert for Trip. We bought the Trip 2 days ago. I don't think I have a chart for Trip, but you can look at the Trip. So here it is Marriott. So we exited at 40% gain. Here is McDonald. Yeah, this is what the McDonald did. So McDonald, little gap down after the earnings. So this is McDonald. So have you seen McDonald? There's a long line in a drive-through. People are not going inside, but they are still buying from outside. And so there's a long line. Sometimes you don't even know where the line is starting. So you go to another restaurant and then you start from there. So McDonald's is so busy. So it gapped down a little bit. We went long in the earning trade and it closed at 205. So it is at 205 right now, 206. Anyway, we exited at 203. So after our entry, it went down little dip. So all these little candles moving down, this is not the stop. There's no reason for you to stop. This technically is still telling you to stay in McDonald's. So exited, made money at 34%. Moss. So Moss is moving, CF is moving. So when you see Moss moving, when you see CF moving, something is going on. I don't know why agriculture stock is moving. There must be a reason. So I leave the reason for the professionals, those big boys, just detect. So like a detective. So get in, got in at 1283 and exited early. Moss has already has gone up further towards 18. We exited, made 48% gain. So be detective. Split on. So if you this stock is always being talked on CNBC, is moving up all the time. So I said, okay, maybe I need to watch this. So people are doing gym from home. This is what happened. 66 entry, exit at 72, 73, 38% gain. So it's common sense. PayPal. So PayPal is moving, Square is moving. So PayPal makes too much money for me. I know PayPal, they're coming up with new technology. So PayPal, after the little pullback gap up, what are the odds of PayPal going down then to go up? If it goes down, it can go to 164. There is a support under the support, 164. So we went long and we exited when it stopped moving. We made 27% gain. Qualcomm. So Qualcomm, when the market shows you this type of chart from the 50-day moving average or from 200-day moving average, it's telling you something that it wants to go higher. And what are the chances of its Qualcomm to come back down and break the 50-day moving average? The chances are less. And if you look on the left side, there's a support right here. How many times Qualcomm touch 87, bounce back, touch 87, bounce back up? So it's giving you clear. And look on the left side, 87, touch, bounce back up. So 90, it gave us the entry. And we exited, I think we exited at half of a position here and half at a higher price. I'm not sure, but we made 20%. I think we exited at a higher price. QQQ, this is indices trade. We entered at 259. So in order for QQQ to enter QQQ, you need to watch the technology stocks. You need to watch the NASDAQ chart. A lot goes on behind the QQQ, but based on this chart, we entered on QQQ at 259, and then we exited at this gap up to 269, 270. Made 51% gain. Roku, we trade Roku. So these are the stocks in my 170 stocks. So if you look at it, I will just keep repeating it. Roku, get in, get out, Facebook, Apple, Baba, Baidu, Home Depot, Caterpillar. Roku, what are the chances of Roku going down then going up after it held the support at 150? If you look at this, 150 is clear support. We exited at 165 after entering at 150, 29% gain. But in a dollar term, the gain is huge. UNP, so this is the trade we did in spread trading. So we buy long calls and then we buy the shorts. We sell the short strike at the target and wait for the stock to reach the short strike, and that's where we close the spread. So we close the spread. I think we haven't closed yet. I have when I send the alert for spread, so I say in advance when the stock is trading above the short strike or at the short strike, close the trade. Don't wait for me. It's automatic close. So it's trading above the short strike. So this trade must be closed, because when the market reaches the short strike and it's near the expiry, that's where the maximum gain occurs. So if you are busy during the day and you don't have time, then if you have a margin account, you can trade the spread. So you buy long calls and then sell the short strike and just look at it once a day. Here's WDC. So we went long on WDC on this gap up. So if you see, I have the same kind of a pattern, the gap above 50-day moving average or above 200-day moving average, or same kind of scenarios. So here is the WDC above the 50-day moving average, and it took a while for WDC to take off. So, but it did not give us any exit. It didn't give us any exit. There's no technical exit. It's just ping pong, wasting time, yes, but it didn't give any exit. And then when it took off, this is where we exited, because we held it for 2 weeks. So we made 18% gain. Here is a win call. Look at this win. So win, LVS, MGM. Look at this win trade. Support at 72. If you look all the way to the left, you see the support. So what are the chances of win going down, then going up, breaking the 72 support? It went up to 23% gain, not bad. Next day, X. So X was moving a steel stock. It used to be a high flyer. Now it's trading at 7. But look at this huge bullish candle. When you see like this, you shoot first, ask question later. So we entered long at this candle. I mean, who wouldn't love this chart? Why wouldn't you take your bet? So trading is a game, and you're taking the bets, and there must be many bets. So you're taking the bets, and over the long run, when you keep taking the same kind of bets, you're expecting to come out ahead. And so you need to take the bet. Take the bet here and exit right there at 50-day moving average when it started to stall. So stall, we exited at 39% gain. It went up further, but 39% gain on this big up move, and then staying at 50-day moving average. Zoom. So no, this is not Zoom, this is Zillow. So yeah, so Zillow had a news that they are going back into flipping houses, and the people are starting to look for new homes and all that. So if you have that news in the background in your mind, and then you see the Zillow moving up from 50-day moving average, and when you see the chart, you don't have to wait for anyone to tell you to buy Zillow. Just buy it. Worst come worst, what will happen? It will break 50-day moving average, come down, you will lose. Maybe not, wait for 55, but you have to take your bet. If you don't take the bet, how you will win? So you need to be willing to risk. If you're not willing to risk, you cannot gain. So that's the bottom line. So you need to be willing to take a risk, sensible risk. So you take the bet, 61. Okay, it moved to 64, 16% gain. So it's not bad. We went long and we exited. We have a reason to exit because of the market conditions not good. Maybe on 17th July. So you have to go back on 17th July and see what was happening to the market. And if you look at the chart, the 64, 65 looks like heavy resistance. So this is where the sellers are sitting here. So imagine the buyers here on the gap up, or the buyers here, they did not sell on this gap, this here. And then from 67, it tanked all the way to 20. And look at this huge hammer. Somebody made a lot of money. So it got bought from 21, 22, all the way here. So there's a heavy supply at 65, 66. All these buyers here, they're just saying, okay, finally, I'm breaking even. So they're getting out. Maybe they didn't get out here. They have another chance here. They didn't get out. Then they have another chance here. They didn't get out. So what are the chances? It will go up or go down. So I'll take 16% gain. If it goes up, it's okay. I'll get in again later. But I don't want to see this kind of move down. So I showed you the chart from A to Z. So we have swing service. The price is 167. $17 for 1 week trial for 5 days. So you may not see everything in 5 days. You may see it. So I have a 550 stocks in the basket. Core stock 170. 8 to 10 trades are sent. Profit objective is 40 to 100%, as you see. Members are expected to act upon buy alert. So when I send the email or SMS, you can have SMS. If you send us the phone number and your phone carrier, we can add it. And we provide the advanced sell target. So you can sell in advance if you want. You can set the conditional order in advance if you want, or wait for the sell alert, or you sell it yourself. So it depends what kind of trader are you. Are you active? Can you manage the trade yourself? Can you add more to it? So there are a lot of things going on behind. So you know, so you need to be smart. You need to be street smart. So when I was growing up, when I was little, I was like a studious, bookworm. I read a lot of books. So my maternal uncle told me, okay, no, she all these reading books, etc. You can reach up to a certain level, but if you're not a street smart, um, you cannot be successful. So you need to be street smart. You don't need degrees. You don't need to be MBA. MBAs are not making money in trading, or PhDs. They are working for other companies. So MBAs, PhD, I have MBA degree too. So I quit. So it's good to have a finance degree and computer degree. Having a computer degree and the finance, so I have both, and then combining it helps in my logic and my reasoning and the things I'm doing behind the scene. There's a lot of things going on. I'm full-fledged IT people working behind, so they're doing a lot of things. So it's good to have a technical knowledge and a finance knowledge, but you don't need it to be a street smart trader. You don't need degrees. All right. So if you have any questions, you can send me an email. Let me see. I have tons of questions here. Oh man. What expiration do you buy, do you mostly use? So 50 days and more. Sometime if I see the potential, so let's say if the expiry is 40 days and the next expiry is like 80, 90 days, so I don't want to pay too much, because if you are smart, I don't know, this is what the traders also, I think they make mistake. They say, I want to buy enough time on my hand so I can make sure I make money. So if you're buying enough time, you're paying too much for the option. So you don't, if you are right, you need to be right fast, within a reasonable time. Otherwise, you're doing something wrong. You don't need 90-day or 120-day for the trade to work out. If it works out, it will work out within 1 week, 10 days. So you don't want the time decay to kill your option, but you need to have enough time in case technically the stock is still within your range. So the stock is within your range, but not you don't run out of time. So I usually buy 50, 55 days, and because of the time decay. So CRWD is still good. We have a 65% stop. If you get stopped out, and if you receive another alert to buy or some update, you can get in. And I usually update that you can get in again. I send out email and SMS, so if you have email or phone number, and you can provide us, and we will send you. I use TradeStation. You like my presentation? Thank you. I really like your service. Okay, thank you. I want to talk to someone and pick maybe a different service. I've sent email with my number. Call me tomorrow. I really don't have time to call you tomorrow or anyone. Seriously, sorry. It's just I don't have time. If you have questions, please send me email. Unless it's emergency, I don't have time to talk on the phone, so I don't talk. Usually, I know that talking on the phone, people just go on a different, like different tangent. They just go on and on and on, and one topic leads to another topic, and I'm just talking forever. So I don't talk on the phone. Sorry. If you have emergency, I can, but not. So I have a coaching service, so I talk to my coaching students. So they book the appointment. I have other things going on, so it's just I cannot. Okay, making money, thank you. What size of account do I need to make real money? So if you have 25,000 and above in swing options, service is better, at least 25, 30,000. So you can take the trades. Sometimes I receive emails saying, okay, I have $5,000 or I have $2,000. It's not good enough. So this is 5,000 maybe for index service, not for swing. So I don't recommend. Uh, okay, premium purchase, how many? So let's say I buy a option at $10 and it's trading at 7, and now it's reversing. So when I bought the option at $10, let's say 5 days ago, and between 5 days ago and now, I have 10 more members, right? And I know they didn't get that alert, and I sent the alert when it was at 10, and now it's at 7, and it's giving the re-entry. It's telling me that it's going up. So I send the alert, take the same trade. I have a dashboard. I take the same trade, and then I send it, and I say, okay, we bought this at 10. It's giving the entry at 7. So you have choices. You can add more to it if you have existing position. So if those members who were there 5 days ago, they are adding more. If they want to, they don't have to, but they want to, they can add. And the new members who joined between 5 days and today, they get that alert. So whenever a new member join, my staff send out the appropriate trade alert to them. Whenever they're joining, like in the middle of the day, they have the job to, they know which one, they send out the alert to the members so they can get in. So somebody joins, let's say at 12:45 Pacific time, so 15 minutes left to the market close, and we open a position and it's looking good, and I want them to get in, so I send the alert to that person saying, okay, we got in at this trade alert, please take this trade. Let's see. Usually the objective is to have no more than 10 position at a time. Are your strikes in the money? Most of the time, so it's choosing the strike is also this where the judgment goes, which strike to choose. So most of the time, my strike, so it's like this. So let me explain. So let's say if the stock is trading at, um, let's say the stock is trading at 101 and my target is 110. If the stock is trading at 101, so I say, okay, let me see which option I can buy. I can buy 100 strike. If stock is trading at 101, the 100 is very close to 101, and the next strike available is 105. So 105 is kind of far from 101 current stock price. So 105 is far. But if I see there's a volume in 105 strike, or if I see that the market can move faster towards 105, then I don't buy 100 and I buy 105. And let's say if the stock is trading at 99 and then 100 strike is there and 105, then I would buy 100 strike because it's just 1 point away from the out of the money. So I buy 100 strike because I know it can just go to 100. Unless I see that 97.50 strike has volume and open interest, then I buy 97.50. Again, another criteria is depending on the open positions I have, the market condition, what the market is doing, things like that. So then the strike is decided. So it's just not like all the time in the money or out of the money. How close to the strike? So I explained this. MGen trade is not doing, it could turn out to be a loser trade in MGen. We had a blockbuster gain before this MGen trade, too much. It went, I don't exactly remember the detail, but our options went into a loss, and then it turned out to be a blockbuster winner for some, and for some it's not, because some they just honor the stop and get out. Some members, they don't honor the stop, they don't get out. they begin with the initial position, like investing 1 or 2% of their portfolio, and then they build the position. They have been with me for long enough that they have the confidence that this stock will eventually go to the target. The target is like a missile. The stock deviates from the path, but eventually it gets hit. So it depends how long it takes. Sometimes the stock takes time, it just deviates from its target and it just doesn't hit enough in the right time. So that's the trade which we lose, where we lose the money, where it comes out to be a loser trade. I am an existing, I think, holding still. Okay. Yeah. What is your price target for Baba and Baidu? So I don't, Baidu, I think 131. And Heath, you are my member, so you must have received the target for Baba and Baidu. So I sent it in the money or out of the money. Okay, I'm also interested in technical analysis course. So you can, yeah, we have a 1-year coaching program, and there's another one. So I started the coaching program at 6 months. You know, originally it was 6 months, then it went to 7 months, then it went to 9 months. So I keep adding new material, then it went to 10 months. Now the next batch is 1 year, but the existing batch, which is for 10 months, they will also go on for 1 year because of the material I keep adding. So now the batch, so you can send me email and we can talk. So if you put the stop at 65%, you may get stopped out. And then when you receive another update or alert on the same, you know that you got stopped out, then you can re-enter, maybe at the same price or even a better price. Great presentation, thank you. Thank you, Sivaram. Adnan, I just signed up for auto earning play, but I have not received any earning play. Yeah, so okay, so this is another members or traders, they do mistake and they are in a hurry to make money from the market. So let's say somebody joins, take a trial, and then they say, I've taken the trial, I have not received any alerts. What's going on? What's going on? Or I have joined the earning service and I have not received any alert. So for earning, it's very selected. It's earning can be, we can get clobbered. So I don't just take all the earning trades, only when I feel that it's more based on the chart, and if the stock goes against us, where it will, how far it will drop, if the apple is falling from the tree, how far it will fall, can we manage the damage? So if we can manage the damage, then we can take the trade. If the damage occurs and we cannot manage, then we don't take the earning trade. So far this earning season, all of them winners, so 100% winners. I did miss some big winners in earning, but that's the way it is. So and this is what other people, some traders do. They get out as soon as the earning season is slowing down. They get out. They cancel the subscription. So what it is, it's like 197 or something. They cancel it. So they save like $30-40 in the subscription. And then when the next season is start, they forget to join. And then after I have 3-4 big winners, and then they realize that, they're not in the earning service, and then they join. So if you cannot afford 197 per 3 months, then don't take the trade. In other words, stay for the long haul in the earnings. So it's like $800 for the whole year. So just stay for the whole year. Don't just get in, get out. So that's what they do. Same thing they do in index service. They get in, they get out. There are tons of books on Amazon. If you go on Amazon, so books, there are millions of books. You can read books, and it will take you forever to learn something. So you can go to the Amazon and just type in technical analysis, and you will get a lot of books. Lot of books. Don't receive any phone alert, just email. Phone alert will be fun. For phone alert, you can send me SMS number, your phone number, and your phone carrier, and you need to be in US and Canada. For beginner service is a swing light. So I have a lighter version of the same service. It's called swing light and it's less price. So you can join swing light. Can really understand. So I only want to trade with my own fund. You can trade your own fund. Of course, you're trading your own fund, Carol. So you can trade the same stock. I do have a stock service. So there are some members who are only into stocks. They don't want to trade options. So I send out the stock service. It's like $67, $77 per month. You can trade stocks. Same, instead of taking option, you just trade the stock. The option trade is the calls are trade are being taken because we expect the stock to move, right? So if we are expecting the stock to move, you buy the stock and sell at the target provided, but you need a bigger account size for stocks. Do you recommend to enter even if the price has moved a lot from your alert? No, Anelika. So there is an article or there is a lesson, call it to chase or not to chase. So in the guidebook, I have explained how much you can pay extra for any trade. So sometimes I send the trade and it just so happens it just keeps going and going and going and it doesn't stop. By the time people act on it, some are busy. They see it's moving, it's not at the recommended buy price. It's at a higher price. So how much you will pay extra. So the rule is 5% extra. So if the stock, let's say the option is at $10, I recommend a $10. So 5% is 50 cents. So maybe you can buy at $10, 50 cents, $10, 60 cents. So that's where your judgment comes in. So you have a budget to buy 2 contracts, but you instead of buying at 10, you're buying at 10.50, 10.60. So you don't buy 2 contracts, you buy one. In case if it goes down to $8, then you buy another one at that price. So your average comes out to below 10. But if you buy all at 10.50, 10.11, then you're buying at the higher price. So your percentage gain may be lower. So that's where the individual judgment comes. So when you receive the guidebook, it explains how much to pay depending on the option range. So I have defined it, and the chapter is called to chase or not to chase. So, okay. Is your strike is based any fixed delta? So usually 50 delta, but I have gone down to as low as 30 delta, 20 delta, and then the stock explode, and then 100%. That's where you get the 150% gain. So like that. Tesla. So Tesla is a $2,000 stock, even more. So the other day I was looking at the chart. If you look at the chart of Tesla, 1500 is a resistance. So anytime it breaks the 1500, for Tesla, you need to watch it very closely to time your entry. They came up with the 5-to-1 split today. So now the Tesla will become even more active. So 5-to-1 split means whatever on the date of the split, I think August 21st, it will split. The price will cut down to 5 by 5, and instead of 1 contract, you will have 5 contracts, and the strikes will become kind of odd. All the existing strike, you will get some odd strikes at the time. So those are non-standard, and then once they expire, they are no longer, you will no longer see. So whenever you see an odd strike in the option chain, it means something happened, like the split happened, or something happened with become non-standard. So non-standard like 22.36 or something like that. So Tesla break of 1500, and then the 1900 was the recent, will take it to 2000. So there's a right now the Tesla is doing installing it. Today it was down, but aftermarket it was up. So I don't know right now what is Tesla doing, but I saw it moved up 50, 60 points because of split. So strategy. So my strategy, I like reversal trade. So there are so many. So one is the reversal. So I like reversal because when reversal is happening fast. That's one thing. And another one is when the market makes a bottom and early detection that the market is sold off. So look at the T-Dog. So Ko was asking about the T-Dog. So look at T-Dog, look at Cyber, CYBR, look at Crowd, see CrowdStrike, look at DocuSign. So all these stocks. So when they go down for certain days and come to the support, then I put them on the watch list and I watch for some clue. So Spotify. So Spotify, we went long on Spotify today. Yesterday it made a hammer. So for the and one strategy is to look at the hammer pattern, and there are other patterns for the bottom. So look at the hammer. Look at the yesterday's daily chart of Spotify. So one of my coaching, Sir Michael, he did send me the alert, and I forgot to put it on the watching list. And today it was moving. So yesterday it made a hammer. So he got in August strike. So when you buy on a hammer, when you buy a short strike, like a little expiring in 1 week or 2 weeks, and if the stock explodes, then you make too much money. So same thing with Ben. Ben traded hammer on Tesla. So he looked for hammer on the intraday chart and buy Tesla calls because or Tesla puts, whatever when I talked to him, he said he made 20,000. So he just started coaching. So look for the hammer on an intraday chart also. Hammer. If you could reply to my email. Oh, yes, Sivaram, I will reply. So I got your email. I will reply. You can go to the website and sign up, please. Index service, there are not many trades, 3, 4, maybe 3 per month, and because of the gain. So we are not getting in, getting out on index trade. So once I determine the target, I stay for that target because of so it's not in and out. Better to do option, just simple trades. I don't know anything about option, but love to learn. So you can do. So this is what the history tells us about the split. So Apple split is coming 4-1. Now Tesla 5-1. If the company is a growth company and the company is moving like Apple and Tesla, eventually the stock goes back to the pre-split price. So let's say if Apple is trading at 450 let's say 400 for simplicity, and 400, and the split occurs, so the price will go down to 100. So now it has more liquidity, more attractive, and more funds can buy, retailers can buy, and daily buying, selling, buying. Those who cannot buy 400, now they can buy 100. So the study is that within 18 months it can double. So Apple from the split, let's say if it is split at 110, it's like right now it's about 445, 450. So if it is split to 110, then expect Apple within 18 months to go to $200. So Tesla also, if Tesla is split as and become a $300 stock, then 300. If the stock is trading at 300, it's not a $300 stock. It's a $500 stock. So if it's a $300, it can be a 500. So you will see Tesla is splitting and then going back to 500. So that's what will happen. And then Tesla, if it's added into S&P 500, then yeah. So okay, all right. So I use a TradeStation. So I answered all the questions. So if you have any more, please send me email, and I intend to have another webinar after 2 weeks, same day on Tuesday. All right. So thank you.